Hey guys, it's Paul Salazar at Hilton Heim here with my partner Christian. And we are with Francesco Foggia, top mortgage broker here in Beverly Hills. We've known you for a long time.
Yes.
Thanks for coming in. And we wanted Francesco to come in today to discuss what are the mortgage trends that we're seeing right now. It is August 2024. This video will be posted probably in September.
Okay.
So we'll talk about what's going to be happening in the next couple months. So Christian?
Yeah, well,
Why don't you
Francesco,
start?
Thanks for having me,
Great,
boys.
thank
I
you for coming.
appreciate the invitation.
Of course, man.
Yeah.
Of
Thank
course.
you very much for coming on today.
Yeah, absolutely.
Appreciate it.
Absolutely.
So I think the Feds have just announced September interest rates are coming down, which has obviously been long in the waiting, which we're very excited about. I think to kind of kick things off, how do you see the market, let's say 12 months ago, compared to where we're at today in terms of the mortgage market?
That's a great question. So I would say that rates have come down about a full percentage point over the last 12 months. I saw rates hovering around the 7% range. Now I'm starting to see rates hover around the 6% range. And that's about a $650 a month difference per $1 million.
That's a lot. That's a lot.
Yeah, that's 650 bucks a month. That's a difference, you know what I'm saying? And with rates being at 6% now, experts are predicting that rates will come down to 5% over the next 12 months, which is another I would say about $27 a month per million, which is about a $7,500 a month savings. But what people need to understand is when rates come down to 5%, the masses are going to come. And I can assure you, if real estate appreciates 1% on $1 million, that's $10,000. That's greater than the $7,500 savings. So I think the point is, if you have the means to buy, you should buy. Because if your home appreciates 1%, that's $10,000. And yes, you want to wait for rates to come down to 5%, or you're going to save $627 a month per million. But again, you're losing out on the bigger picture, which is when the masses come, I can assure you that $1 million home is going to be driven up a lot more than $7,500. When there's 2 or 3 offers on a home, they're not bidding $5,000 more. They're bidding $10,000, $15,000, $20,000 more. The amount of anxiety that goes into purchasing when someone wants to buy something and there's someone standing in the way, they're not going to bid $5,000. They're going to bid $10,000, $15,000, $20,000, and depends on the purchase price even more.
Yeah.
So
For sure.
I think
a lot more.
Exactly.
Yeah.
So I think the point is, and I'm glad you folks are doing this because it's important to educate people that now is the time. My sophisticated clients over the last 3 to 6 months have been buying. They know the writing's on the wall. They see that the Fed is going to start cutting interest rates. They see that the tightening of the money supply over the last couple of years is now really starting to have an impact on the jobs report, et cetera. And the number one indicator of mortgage rates is the 10-year Treasury. And the 10-year Treasury, if you look over the last 2-3 months, has been ticking down. So again, the writing's on the wall. And I think that if you are sitting on the fence, I would step up because you don't want to look back and say, I should have bought in 2024.
And I think that that's a great point because right now, most buyers don't have any urgency. You know, they're kind of waiting around and seeing what happens. But they've been doing this for the last 18 months or almost 2 years now, right? Since the rates went up back in the middle of 2022, right? And that was, you know, we had rates as low as what, the mid twos in early 22 when it was a buying frenzy.
Absolutely.
And then it went up in July and it kept going up, right? And it's been 2 years since that. So I don't know if they're waiting for another fall of prices. Prices have dropped a little bit in certain areas. Some areas have gone up a little bit, but kind of overall, it's kind of been flat or a little bit down. So for most buyers out there that don't have any urgency, I think that's a great message, right? Start to look now and start to make offers now, save money, negotiate on a great price, and refinance in a year from now when rates come down to 5%.
Yeah.
Yeah.
I will say that, you know, we're talking about a big asset, right? This is a big purchase. It's your biggest asset. So, gentlemen, what would you say the appreciation has been over the last 10 years on homes?
10 years? I mean,
And the reason why I say that
Yeah.
is because most folks, they keep their homes for 7 to 10 years.
Mm-hmm.
And the banks know that.
Mm-hmm.
So what would you say over the last 10 years?
Oh,
$1 million
easily.
home 10 years ago, what is it worth today?
I mean, it depends on the area.
Let's say Los Angeles.
But easily, I mean, 60, 70%.
Exactly.
I mean, right? I mean, during COVID, it went up about 20 to 30%.
Right.
Just during a 3-year period.
Mm-hmm.
And before that, I mean, we had a seller's market from 2012, basically, all the way through 2022, a 10-year bull run, which is very rare. Usually it's 6 to 8 years, you know? And the prices really haven't dropped that much. I think that's why buyers are not feeling great about it, because they haven't seen prices drop. And the reason why they haven't seen prices drop is because the demand is still there, right?
True.
Yeah.
So I've got a question for you.
Yeah.
So let's say you've got buyers have been waiting in the wings for the last 18, 24 months, waiting for the rates to drop.
Yeah.
And now they're thinking, right, let's get ahead of the curve. Because we know there's going to be a lot of an influx of buyers that are going to be hitting the market as soon as rates start to drop. So they're interested in potentially buying now, taking advantage of a good deal, and then obviously looking to refinance in 12 months. What are the most popular loan products right now?
That's a really good question
that you'd recommend, or just give some advice to these potential buyers.
Yeah, that's a great question. So there's two kinds of loans, I would say. There's conventional conforming loans, which are Fannie Mae, Freddie Mac loans, which I believe the conforming loan limit in Los Angeles is now $1,089,300. So if the loan amount is up to $1,089,300, that's typically a Fannie Mae, Freddie Mac loan. And Fannie Mae and Freddie Mac, they price their 30-year fixed as their sharpest product, okay? When you go beyond that, and it's a jumbo loan, that's a bank portfolio loan. Now, the banks know that the average homeowner refinances and or sells the first 5 to 7 years. That's why loans are front-loaded products, okay? So
Wait, just 1 second. When you say front loaded, I believe I understand what you mean.
Yeah, but let me explain it for the average homeowner.
Yeah.
Yes. So the majority of the interest that you're going to pay over the life of the loan, the banks know that you're going to end up, the odds of you refinancing are so high that they want to squeeze it in the first 5 to 7 years. They want to make as much money off of you as that they can. So that's what's called front load. They move the interest in the beginning. That's why most of the payment you see every month is typically interest. It's not until after the 7 or 10 year mark where the bank says, "Oh, they're keeping the loan." Of course, they know this. There's an amortization schedule, but after 7 to 10 years, you'll start seeing more of that payment going towards principal reduction. And as the years progress, 15, 20, 25, 30, it becomes more principal than interest. So now what I'm seeing on a jumbo, and it depends on the bank, but most banks I'm seeing right now, their 7-year ARM is the most aggressively priced.
That's a popular.
Yeah, and because the banks know that there's 2 refinance booms that are about to happen in 2025 and in 2026. So all the deals that I've done over the last 12 to 18 months, rates being in the 7s, those folks are going to end up refinancing. And I think that we're going to see rates probably start coming down to like the 5.5 mark. Big refi boom. That's a big enough of a drop where someone says, okay, I'm going to save enough money where the difference in monthly payment, when you divide that into your closing costs, it makes a sizable, it's worth it, okay? And we can talk about refinancing and when's a good time to refinance, et cetera. But that's what I'm seeing as the 7-year ARM, because the banks are like, look, all these notes are about to get refinanced in the next 12 months or 12 to 18 months, whatever. Let's just do the 7-year ARM.
Okay. And I know during COVID when rates were at record lows, there's a lot of interest-only options, 10-year interest-only options, and then after that it'd be fixed. Are we seeing that right now, or is it?
Are we seeing people take out interest-only loans?
Yes.
Yeah, some who can afford to.
Okay.
Remember, interest-only sounds attractive. You just pay the interest. But to qualify for an interest-only loan, remember, these are all 30-year loans. So a 7-year ARM, the rate is fixed for the first 7 years. After 7 years, the loan goes from fixed to adjustable. Interest only, it could still be a 5, 7, or 10-year ARM, but regardless, the interest only period is for the first 10 years. Now remember, these are 30-year loans, so that leaves you 20 years left to repay the loan. So the bank says, wait, you have 20 years of principal repayment. When we qualify for interest only, we're not qualifying you on that interest only payment. We're qualifying you on paying back the loan in 20 years. And if you want to squeeze $1 million on a 20-year repayment, that is an adjustable loan. We have to say, well, wait, though the rate today is 6%, it's not 6%. On interest only, it's probably 6.25%, 6.5%. But regardless, worst case, what if rates go to 7% in 7 or 10 years from now? We need to qualify you at a higher rate on a 20-year repay. That's a really big payment. So you have to be making a lot of money to qualify for interest only. They're not giving away those loans for people who need interest only. They're giving away those loans to people who can easily afford interest only and also paying it back in 20 years.
That's good to know.
It's very important.
That's really good to know.
Yeah.
Okay.
So I've got another question. So, let's talk about first-time buyers. We know that there's a lot of money that you need in terms to put down a down payment, and then obviously continue the mortgage, the monthly mortgage repayment. So, for a first-time buyer out there, what recommendations would you kind of give them right now, given the fact that rates are coming down? We know there's going to be an influx of buyers coming into the market. They're going to be looking at their options. Like, what would you any kind of recommendation or advice you'd give?
Christian, these are really good questions. I will say that if you're a first-time home buyer, you need to go get pre-approved. You may have credit issues that you didn't even know you have. I can't begin to tell you. I'll pull credit on someone. I wasn't late on whatever payment. I didn't know I had a medical late. You got to get that ironed out, because the last thing you want is to fall in love with the property, then get pre-approved. No, you don't want to do that. So get pre-approved, make sure that everything is ironed out, make sure that the money is on the table. This way, when you're pre-approved and you're making an offer, there's no loan contingency. You've already been pre-approved. The deal is contingent not on the loan, but on the appraisal and the inspection. And then you can come in with a really sharp offer. And typically, I'm closing those deals in 21 days. So again, being prepared is very, very important. And a lot of people have anxiety about going through the process. It's not as hard and it's not as tough as you may think. Banks ask you for a few things. They want to know, where have you been living for the last 2 years? Where have you been working for the last 2 years? Have you been making your payments on time for the last 2 years? If you check all those boxes, okay. And then the question is, do you make enough money to qualify for this loan? Well, then you meet with a loan professional. They'll run the numbers and they'll say to you, okay, hey, listen, based on your income, here's how much you can qualify for. I have a joke. I tell my clients, now's the time to ask for that raise. So you want to be prepared enough to say, okay, this is my goal. This is how much I need to make to buy the home that I want to buy.
And how soon should be for any buyer to start speaking with a lender about loan options before they actually buy?
Oh, they should, as soon as they start thinking about buying a home.
Yeah.
You need to be educated.
12 months before.
Oh, yeah,
just
sometimes.
to understand.
Well, listen, if you're self-employed.
What you need, right?
Yeah, absolutely. It doesn't matter. Listen, it's an exercise that a mortgage lender will go through for free. They don't charge you upfront fees for that. They just don't. So I think that it's important for you to have that discussion. If your goal is in a year, 2 or 3, you want to know, hey, where do I need to be to buy the home that I'm looking to buy?
Yeah.
That's very, very important. And, especially when it comes to negotiating a good deal, sharp offer, no loan contingency. If I'm a seller and there's no loan contingency, this is a prepared buyer, a serious buyer, a real buyer.
I agree. And I think most buyers don't get that. And we always try to educate our buyers. If you want to have a very good, clean offer when we can have a better chance of getting a great price and have more power in negotiating for you, is when we have great terms. Yeah. And most buyers out there, if they're buying a house that they love, other buyers are probably gonna like it as well.
Yeah.
And it may go into multiple offers, and they don't understand how many buyers in LA have cash.
Yeah.
I mean, 30 to 40% of buyers I work with, or the offers I get from one of my listings, are all cash. And if you're a buyer that has a loan, that's okay. But if you want to compete with these all cash buyers, do your homework.
Absolutely.
Listen to your agent and get all that stuff done beforehand. That way you can go into that offer process going in looking as an all cash buyer.
Yeah.
Right.
I can't begin to tell you folks, when the market was hot and the masses, the normal masses, were in the market, guys, you remember, how many times did we have clients and they got beat out? And the frustration. Clients would say, oh, I'm on my 10th offer. I'm on my, it's just so exhausting, because then you really want the house. You really want the house. And let me tell you, it's heartbreaking for some of these folks. God, that was the house of my dreams. I really wanted it. So again, being prepared. Now, first-time home buyers, there are a lot of programs out there for first-time home buyers. But I would always say income is a big driver in qualifying for a loan. I've had folks say, I have so much money in the bank, but I don't have any income. That's a problem. Banks want to see the ability to repay the loan. So it's important that, when you're setting a goal to want to buy a home, you talk to someone and say, hey, listen, what are my options? But, I will say that first-time home buyers, there are programs out there for folks that have little down payment, credit issues, reserve issues, because the bank just isn't going to allow you to liquidate all your funds and here's your loan, you have nothing left over, So it's important that you have that discussion. And I really like that you folks, that you two guys, along with Kyle, are doing this education series, because educating a client, and that's how you build a repeat book of business.
Sure.
They love to be educated. So I think this is really solid, guys.
Yeah.
Love that. I think you're right. Like also, when really good properties come up, you know how quickly they go. So if you haven't got pre-approval and you're up against other buyers, you're going to be scrambling around trying to get that pre-approval, and you're not starting on the right foot with the seller, right? Because you want to make sure you've got a pre-qualified buyer, so everything ready to go, so you're not going to miss out. So I think that just adds to how important it is to get that, do that homework and get the pre-approval first before even setting your sights on a home. It gives you the maths, understand the numbers, and then when you see the property you love, you've got a good chance.
You're ready to go.
Ready to go.
Just quickly, so that buyers who are watching understand the difference between a regular pre-approval and an underwritten pre-approval.
Okay, great question. So a lot of times you'll send in your documents and the loan officer will say, oh yeah, great, no problem. Here's a letter. It hasn't been submitted to the bank's underwriter. It hasn't been legitimately pre-approved. It's pre-qualified. Though they'll send you a pre-approval letter, it's pre-qualified. So it's important that you make sure it gets underwritten by an underwriter. Now, keep in mind now with artificial intelligence, they have systems where they will verify your employment online. And if you're a W-2 employee, we pull your credit, we verify your income, the system says you're approved. If you have a complicated income structure, self-employed, multiple corporations, etc., that's not just more, that's a definite needs to be submitted to a bank underwriter. But if you're salaried and I run your credit and the system populates your debt to income ratio, even though I do it manually, but I always like to, double check my own figures, and I see this as a slam dunk, there's no change, there's not going to be any 11th hour, oh my God, situation, then the system will generate a legitimate letter.
Yeah.
So it all depends on the buyer and what their income structure is, and if they need it to be reviewed. But yes, I work for a bank. I was a mortgage broker for 15 years. I moved over to a bank for a lot of reasons, but of which, when I plug in the details of a client's income, assets, and credit into the system, and I see this is a very straightforward deal, he works at Google, whatever it may be, here you go. This is a slam dunk deal. Because remember, I don't get paid until the deal closes. So if you think I'm going to waste my time saying, I hope it works, believe me, I'm not. And I don't think any mortgage loan professional is going to do that either. If he or she thinks there could be any kind of issue with this file, they're going to submit it. And if you think you're going to have an issue with your file, don't try and hide it. Tell your mortgage lender. It's very important because believe me, they will find it. These underwriting teams these banks have systems that they will find everything. And if you don't disclose something, that's called mortgage fraud. And you do not want to commit mortgage fraud.
For sure. I have, I guess, one final question. Unless you have something
one final question.
Okay,
as well.
Why don't you go and then I'll go afterwards. Yeah.
Gentlemen, thanks, Paul.
Okay.
So the big elephant in the room, we know about the NAR settlement. We're now living in a world of
Beautiful. That was my question.
post
I love
August 17th,
Yeah.
where there is the chance that the buyer's going to be paying the buyer's compensation, whether that's both a lease or obviously on the sales side. So I think a lot of people right now in the industry are saying, if you've got a buyer that's going to have to pay the buyer's compensation package, how does that affect the lending market? How does it affect the loan? And we'd love to get your thoughts and some education behind that.
Yeah.
It's being asked by a lot of my clients right now. So, yeah.
Well, first of all, let's talk about the commission. Okay. I think the buyer's agent commission is very well earned. First of all, you're bringing the deal to the table. Okay. Secondly, you're protecting the client because as you both know, there's so many different potholes in a deal where a buyer could get screwed. I don't know if I should say that word on this thing, but they can get screwed.
It's true.
Yeah, they can get screwed.
100%.
So I think that a very seasoned real estate agent that can navigate the buyer because of the amount of anxiety and all the different moving parts is well earned. And I'm not just saying that because you guys are my friends, but it's really well earned. My manager is very, quote unquote, said it's business as usual. We will allow the seller to credit the commission on the deal. So it is important that, when you folks are meeting with your clients, keep in mind saying, listen, I need to get compensated. My firm needs to get compensated. We're going to see a lot of homes. Some sellers are willing to pay. Some sellers are willing not to pay, but I need to get compensated. Absolutely. How can we work this deal out? So as you guys are working with these sellers agents, saying, listen, your seller doesn't want to pay a commission. We need to work something out. I have a real buyer on the table. But folks, if you think it's smart to go directly to a seller's agent, which it may work out for you, right? But from 20 years of experience, where I've seen one agent representing both, a lot of times the client that I'm representing doing the loan, they have said, I don't feel like I'm getting the best advice. I don't feel like I'm getting I don't know. I'm not feeling good about it for some reason, right? And sometimes, it hasn't been the best experience for them. So I do think it's important to have a balance of two agents, making sure that everything stays balanced throughout the transaction. And I'm not just saying that, but I really think that's important. And there's a lot of analysis I'm sure you gentlemen can actually mention now, saying, hey, this is why we deserve our commission. Mm-hmm. Because we're talking about hundreds of thousands, if not millions of dollars on the table for your biggest asset. And if you think personally, I'm not going to have my own consultant that I can call at 11 o'clock at night saying, hey, I just got home from work. I'm reviewing this contract. Believe me, that's important. We're not talking about little dollars. We're talking about a lot of money here. So it's important that you have someone that's on your team that understands you, that their loyalty is to you. I believe in that.
Yeah, no, I agree. It's going to be changing. I mean, not changing per se, but the way things are handled is going to be evolving, and we'll see what happens. There's going to be sellers that are going to be like, I'm not going to pay, and there's sellers that are going to be like, yeah, 100% I'm going to pay, because it's at the end of the day, a buyer is paying for a house. In the past, right, pre-August 17th, a buyer paid $1 million for a house, and they're paying $1 million based on the seller already knowing how much they're going to pay in commission. The sellers have always set the price based on their net. Right?
Exactly.
So that
is about the net.
That has never changed.
Right.
Right. So anyway,
it's always been negotiable as well. So
yeah.
In that respect, it hasn't changed.
No, it hasn't.
It's just interesting to see what you said there about like how the buyers want to be represented. Do they want to have a seller an agent that represents both the buyer and the seller, and there could be a conflict of interest? Are you going to get the best deal? Are you going to get the best price? Or would you prefer to have, the seller represent the seller, the buyer represent the buyer, and that agent's going to represent you as the buyer to get the best possible price? And that's why I think, buyers have to really think about that.
Yeah.
Because if they don't, that there is going to be that conflict of interest where they're going to try and double end the deal and try and get as much money as possible. So
when you're, I heard one agent say, look, if you're getting a divorce, do you want to share the same attorney?
Yeah. There you go. That's
right. I mean, honestly, right? No, I want my own attorney, and I'm willing to pay for it because I don't want to get screwed.
Yeah.
Right.
Sure.
So I think it's really important. One way or the other, you guys are a dynamic duo, a trio. Yeah. Kyle, I think you guys are awesome. And again, the fact that you guys aren't just, conceptual salesmen. You guys are actually in the weeds, wanting to educate. I think it's important that you guys are. I really like the fact that you guys are, like I had said earlier, spending the time to educate buyers. This is how you build a great book of business. And if I was a buyer, I want to work with an agent that is really, really understanding the nuances of this industry and really wanting to educate their clients, because I educate my clients, and that is how I've been able to build a repeat book of business. People have said, hey, so-and-so referred me to you because they said you'd really walk me through every step of the way. I mean, I spend hours on the phone with clients sometimes, really educating them. So I think, again, when it comes to, do I just go to the seller's agent to try and save some money? No, let me first start with a buyer's agent who will try and negotiate their compensation for sure and work something into the deal. But again, we're talking about hundreds of thousands, if not millions of dollars on the table.
Yeah,
So
we haven't talked about interest rates right now, have we? I don't think we've actually touched on where the rates are at right now. And also, the other thing I wanted to ask is, how do you think elections will affect the interest rates and the general market?
Okay, great question. So the best indicator of where mortgage rates are trending is the 10-year Treasury yield.
Yeah, we touched about that.
You touched
earlier.
about?
Yeah,
Okay, so
yeah.
that's really important. So rates have been trending down for the last month. And without quoting a rate, every deal is different, but I've seen money hovering around 6%.
Okay.
Okay?
Got it.
So, interest rates have averaged around 6% over the last 30 years, I would say approximately. So I think we're at the historical average now. If you can afford to buy a home now, I would buy it now. It's like a stock. If you know that the earnings report's going to be strong, buy now. I have a video game stock, and it's about to roll out. And I bought earlier on, and the hype is real, and the stock has been going up. So it's like the real estate market. I feel that when the cost of funds goes down, demand goes up, prices go up, we're going to see anything under $3 million start having multiple offers.
Yeah. I mean, we've already seen it too, right?
You're already starting to see it?
Well, the 2 to 4 range is hot.
Yeah,
It's
2 to
hot.
4 range is hot.
I mean, it's not all houses, but a lot of the houses in that range in a lot of areas are getting multiple offers.
Yeah.
Especially if they're, staged right, and they're nice properties in a good neighborhood, good school districts. And then just about elections really fast. Like, what are your thoughts on how that's going to affect
I
stuff?
honestly don't have any thoughts
Okay.
on it. I don't know.
Okay.
I don't
Okay.
know. It's a wild card at this
Yeah.
moment.
Yeah,
You know
for
what I'm saying?
sure.
So
sure.
I think that if you're comfortable and you can make the payment today, buy the home now.
Yeah.
And then in the next 12 to 18 months, economists are predicting rates are going to come down. You will look back and say, I'm glad I bought in 2024. And then you can refinance the loan.
Yeah.
So if there's anything else I can add, which is really important for self-employed individuals, it's important that you really speak to a mortgage loan officer, because self-employed folks typically write off all of their legitimate expenses, and there isn't a lot of net income left on your personal income tax returns to qualify for a traditional loan. So you really need to have that conversation with the mortgage loan officer, go over the last 2 years of income, because as a self-employed individual, we do a 2-year average. If your income is stable or increasing, we do a 2-year average. If your income is decreasing, we do a 12-month average. If your income is decreasing 10, 15, 20% or more, that could be a red flag for a bank wondering, are you a sinking ship? So we want to take a look at that. I don't want you falling in love with a home where I make $3 million a year. Your company makes $3 million a year. You make $250,000 a year. And that's what banks lend on, not your business income, on your personal income. Now, there are programs out there where they will look at your business income. Those terms are higher. But again, you need to have that discussion with a professional, and therefore, at that point say, okay, I know what my goals are. Here's what I need to do so that there's no anxiety when purchasing my home.
Awesome.
Good
Well,
stuff.
Francesco, thanks, brother.
Yeah,
Always
anytime.
always a pleasure having you
Gentlemen,
here.
Thank
I'm
you.
glad to be
If you
here.
guys want to follow Francesco on Instagram, what's your IG handle?
Francesco769.
Oh, I like that. And Christian?
Christian Hose.
All right. And I'm at Paul Salazar Group. Thanks for watching, guys. And if you have any questions, drop a comment down below, and we'll see you later.
Thanks,
Bye.
guys.
Bye.
Cheers. Bye-bye.